Hello, I'm Kevin Flynn, and welcome to another edition of Avalon's Market Minute. It's April 21st, 2013. Markets sold off last week, with a 2% loss being the largest since last November. It's less a reflection of the size of the loss, which really wasn't that large, and more of a statement on how the market's been a one-way train since the fall. The first question is, what happened to the April rally? Well, to begin with, it may not be over yet, but we'll come back to that. Since the disappointing jobs report that came out on April 5th, we have had a disappointing retail sales report on April 12th, followed by disappointing economic data out of China, and a rather weak start to the earnings season. Events in Boston also rattled the markets on Monday. So it really wasn't much of a surprise to see prices wobble. It's not unusual in mid-April. In fact, it's happened in both of the last 2 years. Part of the reason for that is the unusually steep rallies we've been getting from October until the springtime. As we get towards the end of the time period, confidence starts to waver. Another part is the recurring combination of factors that lead to that wavering sense of confidence. An inflated sense of optimism based on the stock market rally, distorted seasonal adjustment factors, and predictions of turning the corner that start coming apart in the spring. The rate of GDP growth hasn't really changed, and the rate of earnings growth continues to slow. So in the face of that, you may wonder why I say that the April rally might not quite be over. Well, for one thing, it's still April. The news flow may not be cooperating very well, but the default trade ticket is still a buy. The latest front page of Barron's announced that we'll see Dow 16,000 by the middle of next year, so it isn't as if optimism has gone completely out of fashion. And some winds might turn to the favor of the bulls. There's a chance that the tone of earnings season will improve a little bit this week as we move on from big industrials and financials to more tech and cloud stocks and companies that do less business in Europe. The market will probably rebound on Monday for a start because it was down in an options expiration week and expiration Friday. Those moves typically reverse on the following Monday as positions get rebalanced. All we have to do is get past the durable goods report on Wednesday and the first GDP estimate on Friday. We might also get some help from some of the PMI flash reports coming out during the week. They don't have to actually be good, only not as bad as last month. And there's always the chance that the central banks will talk more about the importance of easy monetary policy. Always good for a boost. We are headed for another spring slowdown, but don't count April out yet. I'm Kevin Flynn, and thanks for listening to another edition of Avalon's Market Minute.